This is going to be week 2 of the curriculum I'm pushing out for the YouTube series of my trading system. It's going to be in a playlist itself. Candle range versus to market structure, my personal touch. So let's move forward. I'm going to start off with saying initially, most traders overcomplicate market structure highs and lows. That used to be law for me, but now I like to blend the two in tandem together. So most traders wait for the extra confluence that may never come, and they end up missing the real move. That happens to me from time to time till this day. And the truth is, structure isn't always clean. So there has to be some things that can help refine your edge, right? What can have the additional compass? But candle ranges, they give me the clear way to see things. In this video, I'm going to show you how I blend the two concepts in tandem so you're not reacting late and also reading price as it's unfolding and acting accordingly. So now I got two main components, only two, for the candle range itself, how to define it. The first component is that basically candle ranges or fractals such as price, pretty much the same thing, right? But in this case, for example, it could be Monday's range, which helps showcase the initial set of data for the current weekly candle print. Now, what exists outside of Monday's range, right? And what I mean by that is what is prior to that. That's gonna be the prior day's candle, which in most cases, majority of the market besides crypto would be Friday, right? And then you got previous week's candle, and then you got previous month's candle. So in that sense, yes, you're going to be I believe you're going to be utilizing two of those, the initial two, the Friday and the week, but in occasion, you're going to see monthly ranges play into effect as well. Those are going to be more so once out of the 4 weeks. And then basically, what exists like within that, the intra-session, you already see how it changed together from the higher end. What about intra-session? So in this case, this matter helps with the kill zones, for example, Asia, London, New York, all that jazz. So essentially each range provides structure for the next time, then price. And that's the hierarchy of order there. Second component to this is basically range bound environments. For every expansion, a leg up or down, comes another period of consolidation. Now, I used to hate that, but now it's just range trading has been my game. For me, I look for one higher time frame candle where the following candle prints of the same time frame that I'm looking at fails to close above or below that candle's higher low. Now, this provides me not only the narrative, but also serves as a compass of guidance for which areas of the range are more probable to act on, not just premium and discount. What if we're showing massive acceptance above a bullish area of interest versus to a bearish area of interest, vice versa? So going forward, I only got 2 rules with the candle range, just 2, all right? 2 rules, that's it. No guessing, no overconfirmation, just react to what the candles are showing you. Rule number 1 is the closures outside of that candle's range. So what do I do after that? I shift the range to the accepted candle. That's how I do it. Rule number 2, failure to close outside. Perfect, cool beans. Whether it took out the high but failed to close above, or it took out the low, failed to close below, then I'm still using that original range. It could be an inside month, it could be an inside week, it could be an inside daily. It doesn't matter to me. I will be utilizing such in a manner as long as I got my market structure set, cool beans. And that goes on to the next slide. Market structure break, MSB logic, right? Now, whether the candle range is to remain the same or if there's a new candle range to be established, market structure will be utilized in tandem. Now, I'm gonna be real, sometimes I don't even mark my candle ranges. I just do MS, just because I already understand we're in a certain area. I just genuinely don't like too many things on my charts. You're gonna soon see that later on in this video. For rule number 2 of the 2 main rules is that if it's remaining range bound, I simply mark the high EQ, which is the equilibrium, the midpoint, and the low of the candle range that I'm identifying, right? That I established. From that, I jot down my MS highs and lows for the specific parameters which I trade under. So whether it be a time that I come into the market or it's approaching an area of interest, should it be a premium or discount of the range? And then I may be extra attentive to that time. For day trades, if possible, I'll have the daily or H12 MS highs or lows. However, I find myself utilizing H4 or H1 MS highs and lows the most to dial down to the lower time frame and find areas of interest. So H4 H1 MS highs and lows for the higher time frame for that framework, and then the lower time frame would be like the M15, the M5, or M1 even. That's going to be for that specific set of style of trading, which is day trading, right? Now, more on day trading is I like to anchor the specific M15 and M5 MS highs and lows for inter-session trades. Some say it's scalping. To me, I find it as a day trade because most times for my data, I see that type of framework to only last me about maybe 15 minutes to an hour. It could be a lot less for successful trades of that nature. Nonetheless, my day trades in general would be 1 to 3 hours to unfold if I'm going to wait per session. Now, for swing trades, very simple. I predominantly use the daily or H12 MS highs and lows, with the occasion of the H4 structure highs and lows, and then I dial down to the H1 or M15. I'll keep in mind of the weekly or the monthly point of interests too. But case in point, see how it all ties down. It's not complicated in a sense. It's very mechanical, very sequential, but like it's discretion. Discretion is key. That's the only reason why I'm making these videos, is just to show like, hey, as I go, I'm going to show these things step by step, case by point in case, whatever. You're going to get the idea. And then for rule number 1 though, the market may be on the path of expansion. So from what I have previously mentioned about the above the day/swing trades, it's still relevant. So if the candle range is to be shifting over, not just the market structure shifts, but if the candle range itself is now established a higher range here, this would be the former. You can use that, have like a lighter overlay just for discretion, but I'll keep that right there. But nonetheless, so from that what I've previously mentioned about day/swing trading, it is still relevant. Everything I mentioned for that the days is going to be except for those setups that can include targets. Let me read this again. Except those setups can now be including the targets to pertain to areas of interest that are outside of that range. So if we broke out the initial area of consolidation, that entire range, and you're up here, you establish this range, what's above here? You're going to potentially be an expansion. The worst that can happen is it deviates below and goes back into that range. Now, I don't think I got an example of recent, like I don't like looking back and look at shit that's hindsight because I don't remember things myself, but these are some recent examples I'm going to soon go over. The key similarities and differences are as follows. Very quick and simple. Similarities are both track acceptance and rejection levels. All right. The difference is candle ranges is very time-based, in my opinion, a huge time-based anchor. Market structure is more about structural pivots. So yeah, my bread and butter is market structure. Candle ranges is basically telling me, hey, this is the range, this is the elapsed amount of time so far it had taken. There should be an area window left, and from my experience, little mini tangent, the tighter the range gets, the sooner I think a big move would happen, whether it be to the opposing side or a continuation downward. Now, for the charts, as I mentioned, right? So this is off of recent. I might be able to include something else later, but for sure I'm covering this. NASDAQ, my last trading day was Friday. This is basically my framework of a bull case sample of candle range, right? So basically you got the initial monthly range, right? All the market structure doing its thing down here. Once you have the immediate range of consolidation, I have one candle here with the range high, candle low, and then you got whatever's going on here, right? So this doesn't mean this is the only candle and then this happens. No. So this becomes range bound. You got the candles that print here doing its thing, and eventually you finally get that candle that closes above that initial area of consolidation. Now you may be able to like play around with this, finding your setups there where I would look for, and I'll target areas of interest up here. Or again, like I mentioned, if we deviate below, close below, then shoot, 1, I got another range most likely, and 2, we're probably targeting the prior areas of interest here, and this looks like all that other stuff, like market structure, buy models, sell models, all that jazz. Like I don't like to overcomplicate it. This came to me naturally, all thanks to my mentors. And then going forward, right, you got the monthly overhead. So this is the monthly overlay September. So for me, it's like, yeah, we're in price discovery. Price is gonna be really bullish. So I'm gonna see how bullish it gets. I'm also live testing for data, it's sake. And then you notice I have an anchor within it. That's the initial weekly range right here. So the high, the low, we failed to close above, and that is a sweep, right? But then the following, and so I'm anticipating something bearish. I'm all for something bullish, things happen. That's why discretion's there. So what's in purple is the current weekly candle print that already happened. So I'm having that here. Soon I'm going to be shifting this anchor here over here. And then I'm going to be annotating this former range down here. So note that this current week, yes, we did close above this candle range, but we did do another SFP. So it could roll over, right? Now, the only 2 other things I marked for is for power 3. I'll make that another topic. I don't know where in the curriculum I'll put it in, but it'll be soon. So now moving over, so now I have, like I said, not all the time do I need it, but I will have a daily or H12 market structure overlay, so a high and low. That actually happens to be this current weekly candles range that printed the past week, excuse me. Weekly structure, H12 structure low, H12 structure high. You got the weekly SFP here, and I have some annotations here, which I'm not going to take the time to read. But basically, you already see some interesting things, right? You got a breaker here, up candle, down move, filled this internal range, internal liquidity here, respect to the OB, went up, broke structure. So we could go down there, going down to the H4, everything's bullish, right? So what I'm thinking in theory is that, now look, H4, where is it at? So I actually have it on another, on my trading view chart, but this is the former structure high here, structure low, and then we shifted structure bullishly, and then from there, here, we finally broke structures. So this is the H4 structure low, this is the H4 structure high. And now you notice that this candle here closed below, right? And going forward, I like to be a little preemptive because this stuff, like the H1 MSB did not occur until I think 9 o'clock or 8. I can't remember which candle this is, but in this time we're taking this the former MS high, because eventually towards the end of the day we did shift bearish. Remember that. So former H4 MS high, former H4 MS low. So now technically this high here is the MS high for the H4. This is the MS high for the MS low for the H4. But in this case, we're talking about lower time frame now. We're dialing in a little bit. So I'll explain some things. Basically, moving into it, right? Like this right here, this is my textbook shit. So yes, it went bearish, market shit the bed. But for me personally, it's like, okay, cool. I see my stuff. I missed some moves because of work commute, but like I already see it. That's the best part. If you ever miss a trade, please don't feel discouraged. Try to reverse engineer what you would have done and be completely honest with yourself, because for real, you're training your eyes to execute. Again, you're going to see this stuff time and time again, and you're going to get tired of like missing out. You're going to be tired of like telling yourself, I'm too afraid. And then there you have it. That's the start. Going down. I didn't shoot. I should have showed that. But here, this is a bit more dialed into my A+ framework. I managed to catch this towards what's it called? I managed to catch this before I had to do some work stuff. But nonetheless, like, this is my initial framework. Remember what I said? I dialed down M5 or M15 structure highs and lows. In this case, I have an M5 MS high, and then an M5 MS low down here, which also happens to be later on confirming around this 9 o'clock hour, the H1 MS low, because the MSB occurred somewhere over here. And then like once that happened, it's still pending because like I'm waiting for price to stop closing below, because I think here you can see that the low, like the low was here, the MSB occurred, and then after that the following candle closed below, so that's the current low, and then we failed to close. Some people will like to utilize the third candle to confirm that, and they'll anchor that there. To me, it's not that big of a deal, and it could be, but I'm willing to pay the price for that on my behalf, for my own actions, right? Because at the end of the day, we make our own decisions with this type of stuff. Anyway, so basically got the breaker here for the M5, M1, and then break of structure. You can enter here, stops here, right? Basically, I'm breaking down my trade, targeting certain areas. Everything was smooth. Yeah, it's counter trend because we're shifting bearish, but pretty much it's like basically when the shift of structure happened here for the H4, like I'm thinking we could probably see something like this, right? And I'll do it level by level. I'm not going to be just drawing a bunch of lines, even though in the Discord you'll see me do that from time to time, but like this is just me showcasing narrative. But nonetheless, and that's pretty much it. I do have more examples, but like, you know, I didn't have time for this video to mash it all together, but that's pretty much it. The outro to this video is, once again, I do have a Discord. I have it tied in with WAP. It's completely free. I've had my Discord open for quite a bit of time, almost a half a year, I think. And I'll share the extra chart examples there. Come join. We'll test this all out together. Next week, we'll be diving into market structure breaks so you can start to see how it all connects. It's going to be down to the nitty gritty. You're going to see market structure breaks left and right. Don't go crazy, but there you go. That's pretty much it. And yeah, anyways, guys, thank you for watching and have a nice day. Right.